really, at the end of the day, it's just the matter of a macro market. It's just what happens.
That's why it's really important to have a plan. Have a plan and understand what your goals are.
In fact, my camel out there is suffering right now with a broken back.
So I actually found Pepe when it was only a couple of hours old, and I'm like, oh, this is a funny meme.
Oh my god.
Yo! Who is this DJ?
The old man is swing trading over years at a time. And it's like, that's where the real money is made.
The answer is a permanent loss. With single-sided staking, you don't have to worry about impermanent loss.
If you're aware, if you're disciplined, you can hone that into further financial growth.
Financial freedom, so we can actually live life and not have to be constantly living paycheck to paycheck. I mean, that's the ultimate goal, more or less, right?
Holy shit, boys. It's Special Guest Wednesday. Let's get the sucker popping. Ladies and gentlemen, welcome to the DJ Roundtable. We have a special guest episode for you guys tonight. We're going to be talking about a whole lot of great topics. First and foremost, two of the three panelists that we have on screen tonight invaded Las Vegas over the weekend. We had the Access Alive meetup, hanging out with his folks. We had Crispy Man out in Las Vegas with his revamped website, Hexfire.io. We're going to be talking about that. Hex on Ethereum seemed to take a Luna-like nosedive over the last couple days, so we're going to be touching up on that a little bit. Rags also wants to know, is it possible that we get 85K Bitcoin and 5K Ethereum at the halvening? He asked that question on Twitter this morning, so we're going to be talking about that also. And overall, the crypto market has just been on fire. We have brand new all-time highs pre-halvening on Bitcoin. Ethereum's only 80% from its all-time high, and that looks like it's going to be going full bore here at any time. We might also have a couple different topics. And of course, everyone in the chat, we thank you guys so much. Every single person that's on this show tonight, we are working hard to get our message out and to just get as much good information out on Twitter and on YouTube as possible. So if you guys could, please make sure you find us on all of our social medias. Give us a like, give us a follow. Also, make sure you guys like, comment, subscribe, and share this video with your friends and family. And last but not least, go into the link in the description. You guys will find our Telegram channel, the DJ Roundtable Telegram. Make sure you guys hit that, join our Telegram. We got 24-hour, 7-day-a-week content going on in there at all times. So before we get started, let's go ahead and meet some of the folks that you guys see here on screen. Zenith, I'm going to come on over to you first. What's going on, man? I know that you were in Vegas this weekend. How excited are you for this episode tonight, man?
I am very excited for this episode. It's great to have all these awesome guests on. We're going to have an excellent conversation. I'm very much looking forward to it. But yeah, Vegas was a blast. Shout out to RG3 and the KSB team for putting on another phenomenal event. This was an excellent event, and we actually got a lot of outreach, not just within the Hexagon community, but reaching out into the greater crypto sphere overall. So it was awesome to see there. Shout out to Donovan of DIY Crypto. It was great to meet and hang out with him, as well as Ben Armstrong even showed up. So it was fun to cut it up with him a little bit and see what he thought of the Hexagon community. But that is what I got. We are going to introduce our lovely panel. We're going to start over on the left side. First off, we got Axis. How you doing, man?
What's going on? How's everybody doing out there? It was a wild trip out there to Vegas. We had a good time. It was productive. I got to see a lot of the Axican army. And honestly, dude, one of my favorite things that happened over the weekend was it was in an Uber ride back to the hotel, and I had one of my members in there, and he was basically letting us know how much of a difference we made in his crypto journey. And I mean, that is like the best type of messaging you can receive, is just like heartfelt thanks and gratitude. And so, you know, it's mutual. I like it. What gives more fulfillment than being able to help somebody change their life entirely? So shout out to you. I know you know who I'm talking about. So anyways, it was a blast. Got to do a presentation in front of everybody on passive income on Pulse Chain. Really, really glad that I started with Ink and Pulse validating, then talked about hex staking, and then I rounded it back out with Ink farming at the end. So I'm feeling really good about that now. So yeah, man, the markets are on fire. ETH and Bitcoin ripping. Maybe we'll get some answers to Rags' questions here as we go throughout the stream. Thanks for having me.
That's true. Also, congratulations on throwing the private event for your community. I heard it was a blast, and we even have a award winner on the panel tonight. Who might that be?
Yeah, we have a 3 times award winner for it's Crispy Man. Hey, shout out to Crispy Man, everybody. He won the Alpha Master Award. By the way, this is all voted on by people in the group. There's like 77 members in there right now, and so everybody there was a nominations period, and then there was a voting period, and so he won the Alpha Master. He won the Innovative Thought Leader Award, and what was the other one, Crispy? Do you remember?
MVP. Not that I was keeping track.
Damn.
Next time, my name's not going to be available. So.
Might have to take him off the list next time.
Hey, all right. Speaking of Crispy Man, Crispy, how you doing, man? How's everything going?
Hey, Mr. Taint, how are you?
Awesome, buddy.
I just
excited. I was super excited when I sent you that offer to come on the stream, man, and been wanting to get you back on. So super excited.
Yes, I am very emotional today.
Why?
No, seriously. Hey, things are going pretty good. eHex is very well. Listen, I'll go the other way first. Very, very positive technically. I love to see that we have 2 different chains reacting differently, where I can see the information and actually see the genius of the contract doing its thing. The rest of it, I'm sure we'll get into talk about more about that. But lots of exciting long hours the last few days. Vegas was cool. Got to meet more people that I hadn't met in person before. The folks in Axis's group and other people. You're like, I know those guys. They're on stream, So a lot of people I've been talking to 2 or 3 years I hadn't met in person. And so, but the highlight for me, for this particular get together, were the pitches that were done, and I think we honestly came across at least 1 or 2 pitches of products or ideas to Pulse Chain Tour that might be jump the shark moments, like Tang Talk, being able to communicate cross chain using NFT authorization or validation. So real excited to hear about that. And of course, thanks for inviting me for tonight. I'm excited to talk about Hex, the Hex, on Pulse Chain Hex. I'm excited about.
Yeah, absolutely, man. Glad to have you. And last but not least, we have Rags2Riches himself, Mr. Brandon Davis. What's going on, dude?
Well, I wasn't in Vegas. I was at home crying about how Richard Hart victimized me and did bad things to me, and I was whining about that all weekend. So, but otherwise, I'm good. Brandon Davis from Texan.cc just launched the R2R network, which is pretty cool too. So I give anybody, and that means people here or on chat, anybody the opportunity to come talk about anything you want, and you get access to my social media channels, and I push it out and I support you. And the goal in all of this is to expand our reach and introduce folks to what we have going on in here by creating content about what they like to. So excited about that. And again, Texan.cc co-founder, really excited about launching Freedom Swap this year, very, very soon potentially, and some cool things going on with that as well. So thanks for having me on, gentlemen. You guys have this under control. I like the professionalism. Thank you.
Absolutely. And last but not least, we might have the world's greatest producer behind the scenes, Miss Cassie. Cassie, how are you doing tonight? How excited are you for this episode?
Hello, I am very excited. This is awesome. We've had all of you at least once before, and so we get you guys again. It's awesome. Great to see everybody. Hope y'all have been doing well.
Good stuff. Good stuff. All right, Zenith, what's the first thing you want to talk about tonight, man?
I just wanted to do a quick recap of Pulse Chain Tour Las Vegas. I think Crispy touched on it a little bit before. One of the keynote things that we got to see was the Pitch Fest. We had 6 phenomenal folks pitch their ideas to the Pulse Chain Foundation for their attempt at winning the prize reward of, it was supposed to be $2,500, but thanks to a contribution by Ben Armstrong, it actually ended up being $5,000. So the winner of that was Project Pi, which is a liquid staking, single-sided, very much similar to the Ethereum-based staking, but on Pulse Chain. The idea is that these two gentlemen were trying to make sure that you have the ability to single-sided stake Pulse Chain, just like Ethereum, and claim your rewards there. Additionally, we had a few other folks. We had some crypto education channels talking about the idea of trying to use NFTs to promote education for children, which is like any age you are at. You can use basic crypto literacy or just general education like math, science, literature, history, that sort of stuff, and NFTs as rewards for those folks. And then it follows all throughout their journey. And there's also the ability to use AI as a automated learning tool to help assist and understand where you are as a student, what your strengths, your weaknesses are, and how you can improve on that. So wanted to give a shout out to all the awesome folks that had the project pitches, and there was a lot of great stuff there. Tang Talk Wireless was also one of the pitches. I believe they got second place, I want to say. They had the idea of using the Tang Talk NFTs to blend Web 2 and Web 3 across blockchains to allow for not just text-to-text conversations, but also transferring of images, speech, that sort of things as well. So shout out to all those guys. So question to the panel, did you guys have a favorite project from the Pitch Fest?
Well, so Crispy and I were actually the 2 out of 3 of the judges for that. So as you could imagine, we kind of exposed our favorites, but there was some thought that went into that after the round, and Project Pi. I think a lot of the reason why we landed on Project Pi as a winner was because of the potential there to bring a whole new massive market to Pulse Chain, and then as Pulse gets more expensive, it'll be a requirement that some guys coming in, if they want to validate, the only exposure they'll be able to get is through something like Project Pi. Liquid staking is the ability to stake your tokens, and in this case, stake less of them than the 32 million requirement to validate, and then receive a tokenized version of that staked or validator back in the form of STPLS. And the nice thing about that is that's tradable. So you're basically trading the Pulse value plus whatever the treasury is worth. And in this case, every 15 days, there's like a rolling reward that's paid out. So that's like a $50 billion market on the Ethereum chain, and I think bringing that to Pulse Chain is a big opportunity. So that's kind of why that one nailed number 1, and then number 2, for my opinion, was Tang Talk Wireless, because they're doing some innovative stuff by utilizing the blockchain to do blockchain things, but then they're offloading a lot of the infrastructure to do cool things, like sending text and video and messaging and audio. They're doing that on decentralized software and services that's not on the blockchain. So they're utilizing the best of the technology that's out there in a decentralized way, and they're utilizing the blockchain to do what blockchains do best. So I think that was another really cool thing. It was a close call for me with that. I'm not really much in from the NFT space, but this particular project I found to be really innovative, creative, and new. It was actually designed by I think he's in astrophysics or something like that. He's super smart character, and really cool idea with that. And then the third one was Academic Coin, which foundationally, I think that being able to reward young folks for educating themselves on blockchain and any other what am I looking for? English, math, like the different disciplines of education, like to be able to drive people down certain funnels and reward them for learning about different sectors of education is like a pretty cool idea conceptually. But the reason why they didn't get first is because I think technically they have to think through a lot of the other ways to make that really sticky and awesome. But yeah, man, those 3 projects were definitely the standouts.
Crispy, what are you thinking, man?
Well, as I began to mention earlier, right, I was really impressed with the whole Tang Talk. Now, the reason for that, I use the term jump the shark, and I don't know if anybody else is familiar with the term, but when things are about to get off the rails and get crazy, right? So in blockchain, in crypto, yes, we have speculation as a use case. We have entertainment as a use case. A lot of us will talk about other things we think are really use cases, but branching back to the real world is tough, right? We haven't seen a lot of that. And so that particular protocol, I don't know if it'll be the winner of all protocols out there in the end, but the idea that somebody is using multiple blockchains to validate whether you have an NFT, and that NFT basically acts as your key to communicate across chains, really lends itself to what I think is something that's going to be outside the norm, maybe leads to a lot more adoption, mainstream adoption, that type of thing. And then, of course, as Axis said, without repeating, we did like that Project Pi, and as well as the educational stuff. Actually, everybody who presented, the ideas were reasonable ideas that I would have loved to hear more about. But we only had one prize in the top 3, right?
All right. Good recap. Let's go ahead and change topics here, gentlemen. So, spoiler alert: something happened to Hex on Ethereum this week. Obviously,
no.
As a specific tweet was sent out, which caused a cascading event, a large sell-off of magnitude, proportion. And when you think about the context of the tweet, when you think of the gas fees that are going on Ethereum, it's not difficult to just think back to 2021 when Ethereum was going through the roof with gas fees at the height of the bull market. Everybody on this panel was around during that time. We all saw what the Ethereum gas fees looked like. And Ethereum is already very close to its all-time high. It's 80% of the way there. The gas fees are starting to increase tremendously. Who knows where it's going to be at the end of the bull run? So Richard Hart's decision to sort of put all of his eggs into the Pulse Chain side of Hex. Rags, I want to come to you first. What were your initial thoughts on that? And what has been your, what's been your consensus ever since?
I would say that, probably about 8 or 9 months ago, when we saw the difference in price between the two chains, pretty significant. Okay. So touched parity or just before, and then it kind of fell apart a little bit. I dug through hexsearch.io and I found a video from Richard, essentially saying that, it'll be very interesting to see what happens when Pulse Chain launches and there's 2 hexes. The market's going to decide which direction that they want to go. And I posted that video, I clipped it, put it out there, and if I'm not mistaken, it was probably that video that sparked all that crazy controversy back then. And it's just Richard very plainly saying that, that's what's going to happen. Now, there are other videos out there. One of his videos said, hey, listen, PHEX probably will be more valuable because it makes more sense economically from an efficiency standpoint. So it's probably going to be more valuable, but EHEX is going to be less valuable, and there's going to be a gap. There's going to be kind of a margin there. And as PHEX goes up, it's going to drag EHEX up with it. And if PHEX goes down, the same thing's going to happen. So, I can't say that I was surprised by that part when he kind of points out, hey guys, it looks like the community chose this over that. I am surprised that he went so hard to kind of meme it and this and that. I wonder if that's because there's such a violent reaction about his tweets from certain members of the community that Richard probably, he had to respond back to it. That was interesting. And that told me that there might have been some motive behind what he was doing. Now, that motive has some sort of speculation at this point. But I can honestly say that we've seen this coming for a long time with a variety of his tweets.
Axis, a question for you. Did you anticipate Hex on Pulse Chain becoming the premier of the pair as quick as it did? Or when Pulse Chain launched, did you expect EHEX to sort of maintain the reins for a certain period of time? What were your thoughts initially versus where we are today?
Yeah, so I've been banging the EHEX drum for a long time for a couple of reasons. One of the reasons why I thought EHEX was valuable and still is because it acted as a way to get people in the door to Pulse Chain. So, for example, if you're an ETH whale, there's a couple things you could do. You could, get value on the ETH side, and that value then is virtually transferred to the Pulse chain. And what do I mean by that is, like when the price of EHEX goes up and down, like when it goes up, you're increasing the value of bridged in EHEX value on the Pulse chain side, which gives EHEX holders on the Pulse chain side value to then deploy into Pulse, PulseX, Inc., whatever other tokens that are on that chain. So I still see EHEX as a screaming buy. Like, I think it's really valuable, but the thing is, like, the messaging is convoluted. And what I mean by that is, I've been waiting to say this. I've let it kind of play out for a couple of days because I wanted time to pass and for the emotions to kind of settle down a little bit and for people to realize what's going on here. Richard is basically looking out for the little guy. He's basically saying, like, look, if you don't have 6 figures that you're bringing into my ecosystem, you're better off playing on the Pulse chain. And I think he gave the market a nudge to basically say, hey, he basically said, this is how powerful I am in this ecosystem. And this is where you should put your money. His very word could make this kind of thing happen, so this is why there's been a lot of turmoil, is because, when so much is resting on the words of one man, it's just historically not a good investment decision. Like, you don't want to put all of your value, your net worth, or your assets into the hands of one man, theoretically, right? And the reason is because something like this can happen where something changes technically or fundamentally, i.e. gas fees, that's going to destroy a whole new class of buyers. And he's just looking out for the little guy. Like, if the game theory on Hex in general is so deep, and so it's got so many layers. For example, at the conference in Vegas, I showed 6 different strategies for Hex staking. Just 6, and that's just the 6 quick ones I could think of. And when you're talking about not an uncertain future for Hex in general, some people are going to question, well, did he damage the brand? And right now it looks like that, but long term you'll see that it didn't, and I'll lay out reasons why. Like, this is a very deep issue, and it's got a lot to do with how out of reach staking is going to be for the average player. Like, they're just not going to be able to stake on the Ethereum chain, and that's the whole reason for EHEX existing. So EHEX has been kind of demoted down to a degen play from the angle of, if Dogecoin, Pepe, Bonk, Mog, Sheeb can do these huge price pumps, ETH Classic 2 cycles in a row, BCH, if these coins can, lag or delay, but eventually then make these huge price pumps later on, there's no reason why I couldn't see EHEX being that kind of a play for people, where it's never going to go away. It'll always be able to produce more units for the big holders. It'll always be profitable for the big holders. And the lower the price goes, the more units you can acquire, which then increases your power in the system. And there's only roughly 20 billion EHEX in the user liquid supply, roughly. That's kind of what Crispy and I have calculated. And so, I mean, if the price goes low enough, you could start getting 100 million, or like right now, 100 million EHEX is only 2 billion Pulse. So at some point, that ratio is going to get so vast between Pulse, PulseX Inc., and PHEX outperforming it that you're going to be able to get enough units that you can then transfer them back to ETH and start milking the yield. And then when you're ready to bring that back over to the Pulse chain side, you're going to be able to source liquidity from all of the liquidity that's going to be on the Pulse chain. So what this has done is it's created an environment where Richard's brought the bridge back up. I'm pretty sure there's fees on the bridge on the way out, but not on the way in. Is that correct? Does anybody know that? Okay. So then theoretically, the timing is very, very pure in that, look, he made it so that it's a one-way trap door. Like, look, guys, slam in your EHEX bags. The only way you're going to get liquidity is if you bring it across the bridge. It's a forced move to try to funnel a lot of the economic value across the bridge one way, and then be able to basically it's going to strengthen the bond of EHEX to everything else over there anyways, which then it's going to get a free ride up because there's going to be so much more EHEX on the Pulse chain side. It'll end up becoming a trader's wet dream eventually because you're seeing these huge price swings. I think that's going to continue. I think EHEX and volatility are going to be a match made in heaven. in both directions. We've seen crazy 3x moves this year alone. Last year we saw an 8x move out of EHEX to the upside, and then a minus 90%, and then a 3x up, and then a minus 84% now. So there's a lot of opportunity in there for people to degen around a little bit, just from a trader standpoint. But from a long-term collector standpoint, there's a real possibility here that like a regular everyday guy that wants to bring in, when I say regular everyday guy, I mean like your average crypto medium class guy that can bring in, 10% of his portfolio, and that's 100 grand, could get like 100 million units of this thing, or a billion, and then utilize it. And what it's going to do ultimately is it's going to shake. This is shaking everything up. RH is protecting the new class of users that's going to come into the Hex ecosystem by saying, hey, if you're fresh into the game, you need to be playing with Pulse, PulseX, Inc., and PHEX. That's what you need to do. Short term, it damaged both of the hexes because of the narrative that we set the precedent of, which is long term staking behavior. Hex is the GOAT. It's better than Bitcoin. This and that. And so, because we can't be guaranteed of when the Ethereum chain is going to fix its gas issue, it's just safer for him as a founder to protect more people by funneling them into the chain that's going to be more prosperous. And there's a lot of mechanics going on here to increase the value of the bridged-in asset values and bind it to Pulse Chain, which is going to go do, like if Pulse Chain goes and does the 14,000x, and half of the liquid EHEX supply goes to Pulse Chain, it's going to get a free ride. It's just a matter of how much of that gets deployed into the LP pools, which could then be incentivized down the road for all we know. I don't think the game is so simple as EHEX is dead. I see it as a massive opportunity. It's super cheap. The chart is completely wrecked against Ethereum. It's completely wrecked against Bitcoin, and I think that eventually both EHEX and PHEX are going to rubber band like a mother, and it's going to surprise everybody, because when you're looking at the value propositions on Pulse Chain currently, and the value that Inc. can pay out in the farms, and Pulse validating that consistent yield of like 9 to 15%, those are the standard. That's the metric by which you're measuring success in Pulse Chain right now. So the Inc. yields right now are like 10x what a 1 year Inc. yields are like 10 to 12x, probably more at this very instant, because of all the volatility lately, to a PHEX stake for a year. So like for 1 year PHEX stake versus the 1 year Inc. yields, you're getting like 10 to like 15x roughly bouncing around the value in return. So there needs to be a rebalancing that occurs. I just think the market is so confused and button happy right now that we're going to go through a reharmonization period over the next few months. The interesting part is that it's going to be happening in a period where Pulse, PulseX, and Inc. are just going vertical, right? So it's there. Without going too deep into the thought process of what could happen to Inc. and all this, in that inflection point, and what could happen to the hexes, I think the last thing I'll land on is watch Hex versus Inc. Watch Hex versus PulseX, and expect the possibility there for like a huge role reversal at some point in the cycle. I don't know when that's going to be, but the whole thing, all 5 coins, is like ripe for opportunity to the upside. So that's just kind of my take on it. It's complex. Richard tried to do the right thing. He didn't click the sell button. You guys did, and I didn't sell any EHEX. Like, I'm still holding the bag. I still think there's opportunity. I actually went and bought more. And because of the price underperforming so drastically, I was able to actually take altcoins that I was in, and exit those positions that were downed anyways, and then put them into EHEX, which was super downed. And now I think that's a good play, because I'm going to be able to capture value when EHEX rebounds here in the future, versus waiting on an altcoin that may or may not perform. Whereas I believe that EHEX will. So anyways, that's kind of like some of my thoughts. There's more to it, but I'll let you guys chime in.
To jump in here, you had a good point there, which is that people might be a little button happy right now with the buying and selling. So I wanted to ask Crispy about this specifically, which is we can complain and moan on Twitter all day long, but at the end of the day, it takes people to actually move the market themselves. Obviously, we saw the market movement, but as far as stakers goes, it looks like there was a little bit of emergency unstaking, but not a ton. So, for example, I have some of the stuff pulled up here right now for the Hex data, and on the Ethereum side, it looks like the daily payout for Sunday the 10th and the day after were pretty much double any other day, which means that there's a lot of emergency penalties that were captured there and redistributed to all the people that had previously staked. So Is there anything in the data that you're seeing about like tons of people emergency unstaking?
Well, there was. Oh, sorry, Crispy. Is that for you? Sorry, buddy. Go ahead.
It was either of you guys. Anybody.
Crispy, go ahead and answer that, and I'm going to do something else after that. Go ahead.
Okay. Yeah, I got a couple things to say on this topic as well. So just in general, yes, of course we saw emergency instakes, otherwise we wouldn't have the penalties, right? But we haven't seen high levels of staker capitulation, people dropping out automatically because of this. Truth be told, right, I actually did emergency instake a few stakes, but out of my 100 plus 200 stakes, I could only do 2 of those profitably, right, on the EX side. And it was because they were very short stakes. And that was because I wanted to protect that particular value and bring it over to the pulse chain, which is what I did with it. But that being the case, when I go look at the information we have out there, on these, the supply that's out there, I'll give you a great example. I'm just looking at right now in the current 2 days ahead of us, we have 226 stakes, right? And I'm going to bring this back down to Richard Hart. 226 stakes that are supposed to, that are supposed to end in the next couple days. And out of this 226, only 45 of them are worth more at the current price than the gas to end stake, right? So that's a very, very small percentage. And what that means to me is something different. And I didn't look at the information like this at first. So yes, I'm pretty upset about a bunch of stuff that just happened, but let me shoot to the end. I think Richard figured out before anybody else that in 2 or 3 weeks, nobody's going to be able to unstick. Maybe it'll be a month. And yes, I didn't like the medicine, but I got the message. I got the message that things aren't going to bode well. And if I keep playing in that direction with the gas, I'm going to pay for the gas, right? And so when you start looking at those numbers, and I don't know if it's $100 million in gas, I don't know if it's $10 million in gas, but yeah, that being concentrated into pulse chain and P-Hex or Hex on pulse chain would be much more beneficial to me, to the community, to everybody involved. So
one thing that I want to point out, this is a shout out to Funding Jim. On 3/18, there's going to be 6.76 billion hex worth of hex stakes expiring, and I've not heard many people kind of talk about that, but that seems like a freight train. So I'm curious if you guys think that this was orchestrated in order to actually save people, scare them of getting out of the way of that freight train.
It's entirely possible. I think Crispy had a really good point there, which is people are probably going to be a little pissed off about the price right now. However, at the end of the day, he's fading the medicine, which is he has the eye on the larger problem, which is the gas fees overall. And if you want to continue to use the product for its actual use case, you're going to run headfirst into that, and it's only going up from here. So
yeah. It's 798,000 T shares expiring, cumulative shares expiring that day. So, Funding Jim, he put a post, check it out on Twitter, but that's quite interesting. And the question is, and that's on Ethereum, is that coincidence or not coincidence? So, it seems very interesting.
It's a good question to ask, because when it comes down to it, I think you had mentioned this earlier, Rags, is that Richard Hart made the decision based off of what the market decided. So if we have that amount of T-shares coming available, and if there was some sort of preemptive plan to sort of get people out of the way of a possible cascading event naturally happening, then what does that say about the market and what everybody that is in the ecosystem has chosen of themselves? And it's interesting because you can look back and see how, a week ago, Pulse Chain, PulseX, a large majority of the ecosystem was pumping 30-40%, but Hex on Ethereum wasn't pumping that hard.
Right.
So,
you bring, remember how I said earlier, okay, I see that he says the market's chosen, but then why did he go out of his way Like, what's the motive behind going out of your way to scare people off of Ethereum chain? And this seems like a very strong motive with all that supply coming due. I've not got into the research part of it, and Crispy, maybe you can fill that in, but whether it's valid.
Well, listen, it's certainly valid that that's coming out, right?
Yeah.
Those amounts are coming out. But we're in a situation now where we have these rolling stakes out, anywhere from 30 to 90 days. And there is a little bit more coming out at that time, but almost all of it is principal, right?
I think it's highest since Hex launch, one of the highest since Hex launch, I think.
It could be. It could be that it's the day that the most come out. But I was looking for chart. I'll send you a link to. But
Cool.
they just showing what this looks like, and yeah, I mean, you can go to Hex.vision as well and see something similar out there with it stacked up. In any case, yeah, sure, this could be a big deal, right?
So
what have we seen? What have we seen in the past? We've seen those short stakers restake.
Yeah.
Right.
So that is interesting, because now let's put our speculation cap on, and he's literally begging people to maybe get out of the way. So that's painting Richard in a pretty good light right there, which it could be the case. Or maybe he doesn't give a damn. But listen, if the OA wanted to destroy Ethereum, the person who has the power to destroy something actually has the power. And he could have done that. He could have destroyed it. So I'm very interested to see kind of what happens on the 18th. And it's just one of these things that pop up. It's one of these little narratives. We have fun with it. We can talk about it. So
Yeah. Well, I think if we go to look on the Pulse Chain side, you're going to see something similar, except larger.
Yeah.
And
liquidity's still there.
Time frame.
Yeah, we've still got.
Crispy, are you saying that there's
mil.
the same exact 2.8 billion coming out on the 28th on the Pulse Chain as well?
It won't be exactly the same amount, but I mean in the same type of time frame, because we've been running very high numbers on the Pulse Chain side short as well. But it's two different situations. It's higher price, lower price. Destination, is really Pulse Chain is where people are going. Liquidity, I've got lots of liquidity on the Pulse Chain side.
Yeah.
My
immediate thoughts are we could definitely get some real data on, like, for example, I'm looking at it right now. There's 2.78 billion hex coming off on the 28th of this month. We could actually go in and check and see how many wallets is that? Or do those wallets have a history of dumping?
Right.
Do they? I mean, you could actually find this information out. It's the blockchain. That's the beauty of it. So yeah, I mean, until we do that work, we won't know for sure. I can't do it right now, but it'll be interesting. Maybe Crispy can help me with that, and we can put a post out ahead of time so people kind of have an idea of the validity of something like that occurring.
Mm-hmm. And then what happens after that? Maybe he steps in then. I don't know.
Some of the biggest dumps in the Hex history created a floor price, and then the price ejected off that level within a few. So, I mean, it wouldn't be unnormal for smart whales to set limit orders, because you can't really see them on the blockchain, not to my knowledge. You can't see the limit orders, but someone could set limit orders down there at like pre-Godwell pump levels, like 0.000 some number, or 3 zeros in a number, and just protect the price there, create a floor, and then shoot it up because of that low liquidity. I see so many possible ways that this can play out, and to me, man, has it been crazy volatility. Did I expect a perfect setup to get blown out like that? No, that was like a perfect setup leading into. I mean, we were literally set to go. It was going to create a FOMO wave, and people were going to buy the shit up to like 3 to 5 cents. Is what I felt like was about to happen. Like that $14 million wall was just going to get chewed right through. Like I felt like that's kind of like the sentiment momentum. But like as Crispy led to earlier, there's a very good chance that Richard just bought, okay, let's put it this way. The SAC wallets just accumulated 170,000 ETH, so there's no more supply. And that's verifiable because I actually just downloaded a Glassnode premium membership, whatever, and I looked at the on-balance exchanges for Ethereum, and it's at the lowest levels it's been at since January of 17.
Liquidity crisis.
So that means there's a liquidity crisis in Ethereum, and he helped exacerbate that, which means that the price of ETH is about to double to 8K, like really quick. And it only makes sense that in those times of massive price movements, that's when the gas fees get the worst, And we could probably expect that he's just trying to protect people from the inevitable at this part in the cycle and not get them to be staking on the one side, and to try to bring that economic energy into Pulse ahead of time, like you're saying. It seems like it's going to be an interesting situation. It seems like it's going to be a profitable situation for a lot of people. You just can't. At this point, I would not encourage anyone to ratio trade out of one hex for another. I think that opportunity's gone. I think there will be another opportunity down the road where the hexes will come closer in ratio. And the one thing that I would look back to kind of solidify that is looking at ETH Classic versus Ethereum. This is an analysis that I put out for my members way back in October of last year. I did actually, I think it was August. Actually, you know what? If you want, you guys give your spiel, and then I'm going to pull up some charts that kind of shows that relationship. I'll actually pull up that deck.
Well, just to bounce off of what you were saying there, Axis, I think ripping the Band-Aid off, right? I mean, you have to take into account, you have to look back at 2021 and see how the Ethereum gas fees played into account. And with the bullish momentum that we have going off of the spot Bitcoin ETFs and the potential of an Ethereum ETF coming around the future, you see all the bullish momentum in the marketplace right now. You have to figure if we're going to get 6-figure Bitcoin, we're probably going to get 5-figure Ethereum. And if we're at 5-figure Ethereum this time a year from now, then what are the gas fees going to look like? So, in some ways you have to rip the Band-Aid off and just deal with it as soon as possible. And I feel like the post that Richard made, subsequent prior to that posting, when he was talking about the possibility of $241,000 Bitcoin, I feel like, he foresees, as well as a lot of other people, understand how strong this market can be this cycle and understand how just deafening those Ethereum gas fees are going to be.
Yeah, we'll see what effect that shifting some of those transactions to Ethereum layer 2s actually has on everything. Be interesting to see that. But of course, this is the other part with EX, which is it's still better than 99% of contracts out there. And guess what? Ethereum's going to get better over time. I don't think it's going to get worse. They're going to roll out some fixes. So the question is, if you can reduce friction between chains or reduce friction on Ethereum, is Hex going to become more valuable when it's easier, more cost efficient to accumulate it on the Ethereum side? And I would say yes. And I would also say that's why he didn't kill Ethereum Hex when he could have.
All right, Axis, I'm going to go ahead and share your screen right now, okay?
Sounds good.
All right, you are up.
So this first chart here, guys, this is the whole point of this. I'll give you 5 slides. This is from, this is an analysis from last, I think, August. Anyway, the orange line is Bitcoin and the green line is Bitcoin Cash. So you could see here the fork in August of 17, and how the prices of the two kind of interplayed with each other. And there was actually periods of overperformance, and that's signaled by this white circle. You get 3 periods of overperformance where these are measured in percentage gains from the date of the fork. It was about a month later, Bitcoin Cash overperformed Bitcoin in terms of percent returns from the date of the fork. And then it went through a long period of downside where Bitcoin actually started to do a lot of the heavy lifting that cycle. And Bitcoin Cash kind of lost favor for a period. But it was then in November where it just shot right up for a period of overperformance in a downed Bitcoin market. So it became like a trading opportunity for the market. At this point, the price was up probably 200% from the fork date. And then as time went on, Bitcoin continued to overperform until the cycle topped. But then in December of that year, about less than 30 days, it was probably 2 weeks after Bitcoin topped, Bitcoin Cash came up there and tapped it. In like a 3-week window, it just went straight up 300%. And so this is a good example of, yes, there can be a fork. Yes, one can be worth less for a long time, but eventually at some point there can be a period of overperformance, and this is proof of that. Now, if you held this Bitcoin Cash and you didn't take profit at one of these overperformance periods, that would have been a mistake because you would have lost Bitcoin value. But this is just kind of to show the point of look, It's not over for eHex. It's actually in a better place than a Bitcoin Cash was relative to Bitcoin, in my opinion. I don't know if you guys feel the same way. But because of the immutable code and the opportunity to capture a lot of units and then get that the yield, and then transport that yield into Pulse Chain. So I think it's just like kind of going to be like a yield arbitrage play where like the yield of the two hexes are going to diverge a lot because of the activity that's occurring. And it's going to create opportunity to get more units for less of eHex and then transfer it back across the bridge, get the yield, and then start sending the yield back over the bridge. And at any rate, if fees gets fixed, then you kind of front ran all of that years in advance, potentially, if you're a big enough bag holder. So this second chart here is Ethereum and Ethereum Classic. Ethereum is in white and Ethereum Classic is in green. And this goes back to the date of the fork from when the DAO hack occurred and they forked it. You can see Ethereum Classic actually overperformed for the first 2 months and then retraced 80%, whereas ETH didn't overperform during this period, but it actually crashed only 53% relative to its high here. So the Ethereum Classic in this case was much more volatile, right? It was more volatile up, more volatile down, but it was overperforming ETH 2.0 or the ETH 2.0, 1.0, 2.0, the forked version of ETH at the time. It underperformed for this period and then throughout this cycle as the price went, as time went on. Now we're in 2017 here. ETH started to try to take over ETH Classic, and you can imagine that the sentiment was, look, ETH Classic is the real ETH. The Ethereum is the forked fake version. They just did that because they wanted to roll back the chain, and we had all these issues. So the sentiment and the thought process in that period of time was definitely combative. But you could see how, because of that, they did take turns fighting over price performance from that date. And it wasn't until the very, very end of the cycle where Ethereum finally overshot, right? So what this meant was that ETH Classic did 16,000% over 386 days, and it overperformed almost the entire cycle from the date of that fork. But at the very end of the cycle, ETH took over and went an additional 4,500% for a total of 20,500% over 404 days. So a little bit of a different situation than Bitcoin and Bitcoin Cash, in that Ethereum Classic kind of led a lot of the cycle in terms of percent returns, and it did it faster. But at the end, Ethereum had the last laugh. And obviously we know how that kind of played out. Going into cycle two, we had the COVID bottom. And for this entire 1.5 year period, Ethereum Classic basically got decimated compared to Ethereum. And remember, this was in a proof of work area for Ethereum. So the mechanism for consensus was the same on both chains. And the ETH payouts were just better on Ethereum. And I think people underestimate how powerful Ethereum mining affected the price. It was the main driver. It was so effective and so powerful that NVIDIA became one of the most expensive companies in history on the back of, first, mining hardware through GPUs for Bitcoin and ETH, and then now that narrative has shifted to AI, and it's going to go even farther. And this is going to actually end up being a big 10-year plus bull market on the back of AI, and how much that's going to change the economy globally and create all these efficiencies where there were none before. But sorry about that side tangent. The message here is that, look, for 313 days, ETC underperformed Ethereum. That could be ETH. That could be eHex this cycle. eHex could just shit the bed and be under a penny for 313 days. And then right at the end of the cycle, we could see a Dogecoin type move where it ends up giving us 4,000% returns like in 30 days. So the net result here is over 420 days from the COVID lows, you got, so if this is like saying ETH Hex, if you capture the bottom on ETH Hex, you could see something like a 44x return over 420 days. If ETH Classic is a good representation of what ETH Hex could do. But just in this 30-day period, if you missed out on all this action because you weren't going to take the opportunity cost and you're going to ride P-Hex or something better like Pulse X, and Inc. at the current moment, you're going to ride those up But then at the end, that if you just captured that last 30 days of price pump, you could actually capture an additional 9.7x during that meme coin surge moment where eHex actually does do a nice fat move. So anyways, what do you got? What are your guys' thoughts on these things? Do you think that Bitcoin Cash and Bitcoin and ETH Classic and ETH are comparable to eHex and pHex and the narratives and how they might change and evolve over time?
I think it's. I think that it would probably be easier for these intersections to happen with eHex and pHex because we're dealing with, if you look at Bitcoin and Bitcoin Cash, two different networks. In terms of decentralized finance and how that infrastructure was built out back then, it's not nearly as robust as we have now, and it's not nearly as easy to move liquidity across chains back then as it is now. So I certainly think that people chase green candles first and foremost, and if people just see a little bit of opportunity and somebody like Sami makes a chart about it, it's the Sami effect. He could run it up if he wanted to by himself at that point. So I think, the rubber band effect makes a lot of sense. And I just don't see it. I've said it on the day that he started tweeting. I do not see eHex dying. I see all these people who think they're trapped right now. I think they're going to see something completely different and not in the not so distant future. That's what I would say. So very good analysis there, Axis.
Thanks.
Good stuff. Any final comments before we transition? All right, cool deal. All right, let's go ahead and transition. Hey, Rags, I know you got to take off here in a second. I wanted to pull up a tweet that you made earlier this morning real quick, and we'll have a quick conversation, get your opinion on it and all that good stuff. So you made this tweet earlier today. Is it possible for Bitcoin to hit 85K and Ethereum to hit 5K by the halving? So you made that post this morning. What do you think personally?
Yeah, I think that we're in a situation right now where Wall Street is heavily invested in making the first experience for its investors very profitable, and they want them to feel very good about their Bitcoin investments. They're 1 to 5% of their portfolios here. So I think that there is motivation to move this up to the $85,000 range. I think maybe we could see a little correction around there. I think there's two landmines this year that we have to look out for. The first one is the halving, because every single cycle, either, right around the halving, plus or minus 3 months, we've seen about a 30% correction on average. And then the other landmine that we have to look out for is the Federal Reserve decreasing interest rates if that happens this year. Now, with CPI that just came out yesterday, that's looking a little bit less likely in July. The market was pricing in June or July for that to happen. So, those two things, we'll kind of see what happens here. Very interesting to watch. But yeah, Ethereum too, the ETF, the narrative, everybody's hyping that up. They're doing the same thing. So Ethereum, 5K easy, I think, for Ethereum. 85K, not as easy for Bitcoin because it's heavier. It's thicker liquidity. It's harder to move. So, but Ethereum certainly, 85K maybe for Bitcoin.
When it comes to
Zenith, I was going to say he brought up interest rates. Could you touch on that there for a minute?
Oh, for sure. Interest rates is one of the things that I always love to watch. CME Group is the tool that I use. If I recall correctly, the last time that we were looking at this, it looks like there's about it used to be a 20% chance for a drop in May, but now it looks like that has dropped to 10% chance for a drop in May. And then the June meeting has actually a 61% chance of a quarter point drop. So that's what we're looking at. I know previously we had Jerome Powell come out back in December of 2023. They were talking about the high likelihood of doing 3 drops in 2024. And then as we've kind of gone through 2024, Jerome Powell's really walked that back and be like, we got to watch the economy. Inflation's not where we want it to be. And now we're at this point where we were expecting the interest rate drop to happen in March in like 3 days here at the meeting. But now it's looking like June, possibly, maybe. But then after that. So obviously this is a macro event, which is going to affect the macro markets, and then how is that going to bleed over into our crypto space?
It's a problem, man. It's a big problem right now. And here's why. We're in a presidential cycle right now. The election's coming up. And what do presidents do? What do treasuries do? They strike deals with the Saudis to keep fuel prices, gas and oil low. And that's kind of like scratch my back during the election year. Whoever gets elected after that, hopefully it's my enemy, just hike the prices back up, make them look bad. But that's the kind of tool that they use during presidential election years. And right now you have some countries that are actually not playing ball. And what you're seeing is rising fuel costs right now, which if you have rising fuel costs, that's higher cost of transportation, which passes on to the distributors, which passes on to the retail stores, and which passes on to the consumer. And then everything kind of gets out of whack. So I think that they're looking at the CPI numbers and they're thinking, well, this isn't so good. I'm not sure if we'll cut rates in July, man. I don't know if we're going to get 3 this year. I'll be very surprised if we do, honestly.
I would be very surprised as well. But I think that we've had a bit of an interesting narrative going on with the launch of the Bitcoin ETFs and the possibility of the Ethereum ETFs coming out in May, potentially. What I mean by that is previously we had the CEO of BlackRock talking about how the increase in the Bitcoin price before we even pumped past $50,000 was the flight to quality. So in my mind, we have a lot of capital invested in the Bitcoin ETFs now. If interest rates drops, what that effectively means is that the cost of borrowing money is going down. Therefore, business investment should be going up. If we've already pumped this much with the Bitcoin ETFs, that seems like one of those kind of like double impact events for me, where it's like we've had Bitcoin go up so much that it might be time to take profits. And at the same time, interest rates are coming down. Therefore, it might be a juicy opportunity to invest more in traditional, like brick and mortar businesses or traditional markets. Am I crazy here?
No, it makes sense. And what's interesting though is you have all these businesses chomping at the bit to be able to refinance some of these loans that they took out, and they refinance it or they do a cash out refi. So they're trying to tame inflation. They think inflation is under control. Interest rates drop a little bit. Businesses go bonkers and they pull out a bunch of cash, and then that cash starts chasing the same amount of goods and services. And the goods and services haven't increased in supply. So then inflation just becomes sticky. I'm going to say this, guys. I said this probably, 20 months ago. I said the 2% inflation target, that's going to go away. The new floor is going to be 3%, in my opinion. So I think we're going to see that. Yeah.
Keep
Gentlemen,
in mind, though, that...
go ahead, please. No, please, go ahead.
Just keep in mind when it comes to inflation talk, we look at the data that is provided to us. In reality, actual inflation, not how they measure it exactly how they want to, is oftentimes maybe double whatever it is right now. So that 2% is probably 4%, and that's the target. But right now, we're probably sitting somewhere closer to 7.
Correct. Or more. Who knows, man? You can torture data all you want to make it say what you want, and that's what they do.
One of my least favorite things is trying to follow all the different meetings, although I follow all of them, so it's probably my favorite activity. But what I mean is that it feels like they cherry pick data all the time, because sometimes they look at specifically this month's inflation or year-over-year inflation or 6-month averaged inflation or 3-month, and it's just like, all right, you guys got to be consistent on this.
Yeah, PMSNBC does that all the time. It is what it is. Guys, here's what I want to say to everybody here in chat. If you notice the people on this stream right now, we are not down in the dumps, okay? We're not on suicide watch. We are excited because we understand what's at stake here. Crispy, you were muted if you said something. But we understand what's at stake, and we will understand where we are in the cycle and the massive amount of opportunity. Guys, keep your head on straight. Get off Twitter if you need to. Just tune into like the one person that doesn't freak you out every time you listen to them. It's going to be okay. And I hope that you guys see that with all these smart people here on stream, minus myself, of course. All right, guys, I'm out of here. You guys take it easy. Thank you so much for having me on. It's an absolute honor. I love your show. Always have, guys.
Hey, brother, appreciate it. You're welcome back anytime, man. Thank you.
All right. Be
See
good,
you,
buddy.
Rags.
All right.
Yeah, inflation.
Yeah.
I will say it's kind of a bummer that Rags had to dip out a little bit early. Every time he comes on the stream, I'm always not one of the people on the panel, and then I like caught him for 5 minutes on the effing hangout over on RG's stream. But glad to have him on. He's a really smart guy and does cool stuff. I mean, not all of us have launched tokens. Well, I guess except for Axis. So
yeah, I want to know what y'all's thoughts are. Crispy, do you think it's possible for Bitcoin to get there at the halvening, $85,000. Is that a far stretch? Do you think we're going to crab from here and maybe take a dip? What are you thinking right now?
Well, we'll see it when it happens. Hey, listen, we're already into kind of new territory with Bitcoin, right? And what's happening with that. Sure, it can go to 85, it can go to 105, there's not much that we can do to control all this. I mean, you got Michael Saylor buying more Bitcoin, right? Hundreds of millions of dollars worth. So yes, we're going to see in real time that these institutions are going to manipulate the price of Bitcoin in the upwards direction, right? And then they're going to do the same thing with ETH. And so yeah, could it go up there? Sure. What narrative would it hurt if it did? As long as we don't have a blow off top where that would start ringing bells to everybody that, hey, we don't have enough money coming in to buy more. Why not? It can go as high as it can go.
I know that typically from cycles past, Bitcoin at least hits its terminal price before it tops out. And I want to say last time I checked it, which was yesterday or 2 days ago, terminal price for Bitcoin was right at 126. So even if it gets up to 85K, I mean, there's still plenty of room there before it gets up to its terminal price. Axis, what are your thoughts here?
On Bitcoin?
Yeah.
Or on Bitcoin, I think we're
on either.
Yeah, we're on unprecedented territory. We have unprecedented territory where the price of Bitcoin has just broken out of like a, let's see, how many years has it been? It's been 2,282 days that we were suppressed by this key level where when you measure Bitcoin's price performance against the total money supply, M1, we haven't done anything new on Bitcoin since 2017, December of 2017. Maybe I can explain by showing this chart. It's kind of an important one. It's under the radar chart. I did at Sami on this one time because I thought it was so important. But
he said M1 money supply, and I think we're all interested now. Let's hear it.
Yeah, so I mean, you can see clearly here that the price of Bitcoin has not made new highs against the M1 money supply. This is a monthly chart. Go to a weekly. Since we haven't been above it or close candles above it since January of 2018, and we just did that now for the first time. Last week we closed our first candle above this level here and since in that many years, which is, I don't know how many years that is. It's a lot of years, since 18. And I mean, this is, so to break this chart down and give people a simple understanding of this chart, what is it saying? Well, this is the bottom of Bitcoin when Bitcoin bottomed. This was 2011. So I think this was Gox here, right, in 2014. So you could see here that Bitcoin price outperformed the money supply and continued to basically change the game forever for 2 cycles straight. And this was the 20K Christmas on Bitcoin where the price of Bitcoin continued to outpace the new M1 money supply. But then in the following summer of 2019, it got trapped at this level here. And then it got trapped again at the 64K top. And then it got trapped again at the 69K top. And part of this was because of the inflation of the money supply here around the COVID era, where there was like 5x the money supply, right? So in terms of the history of Bitcoin's price performance against the money supply, the institutions or the Fed or like the elites or however you want to term it have been basically keeping Bitcoin like contained or trapped. But this is the first time since December of 2017 where Bitcoin's actually gotten out under the weight of the money supply and is starting to overperform. And this might be saying like there's a lot more left in the tank for Bitcoin. And one of the reasons why I think this is possible is because like when you measure Bitcoin in other currencies, like this is the Argentinian peso here, it broke out against its all-time high against that currency all the way back in April of last year, and it's done nothing but go up since. So this is like literally changing the dynamic globally of how nations can interact with each other. And a lot of these nations that have currencies that are getting blown out and are worthless, they're able to now leverage Bitcoin, for example, to get an edge in the world. I don't know to what scale yet, but over time, this will continue to level the playing field for people in different economies outside of the G7 or the BRICS, this is going to be a way for those people to just plug in a miner on their electrical grid and make more than their salary and really outpace the goods and services in their local area. And so this is changing the shape of the world economically in a way that I don't think people are really realizing. And Bitcoin's just the start. That's like the virus that enters into the economy and then totally starts to shake things up. And you're seeing that here, and when you measure Bitcoin and other currencies breaking the all-time high way before it did in the dollar terms. And then you're also seeing it then again in the money supply here, where we're doing something we haven't done since December of 17, where we're breaking out, and now Bitcoin's in price discovery relative to the total dollars in existence, which I think is like an important thing to measure and keep track of. So in terms of how high can Bitcoin go, I don't know. It's changing the game. Like it's completely structurally, fundamentally changing the possible outcomes. I think when Richard Hart came on and said 240K Bitcoin, that was important to hear that because he's seeing the potential there with the volumes that are coming in, and he's an OG, so he kind of has a good feel of the market. The whole idea of getting to 80, 85K and then that's a wrap for the cycle is kind of out the window now. Now, could we see Bitcoin go and top out short term at 80 to 85K or 120K? Of course we could, and that would be healthy, and we want to see that. My ideal setup would be we go to 85K and then we come back to 50K and we build a base for a second leg and really see that double bubble idea come to fruition in the late of next year or early 2026, which is what I think is going to be a great year to be selling cryptocurrency assets.
Hey, Axis, for this chart, do you happen to know if it includes the change in the M1 money supply definition? I think it happened back in May of 2020, which is pretty close to that big red candle for back when we did all the COVID money printing.
Yeah, so that would be here. You can see this big gap down. This was on May 4th, so that does actually line up quite well. The COVID bottom was here in March, so that's interesting, right? So what did they change? You're going to have to teach me something now. What did they change about the definition?
So the definition for the M1 money supply was changed around May of 2020. This is just, I had to look this up on Investopedia real quick. They changed it to include savings accounts to, I think that's pretty much it. Just to include savings account, because that was something that was previously left out.
Okay. Well, then if that's true and we just like branch off, then yeah, it doesn't look too much different than what we'd expect, I guess. Maybe another thing to do just on the fly is check, well, what does it look like against M2 NS?
M1 money supply includes those monies that are very liquid, such as cash, checkable deposits, and traveler's checks. M2 money supply is less liquid in nature and includes M1 plus savings and time deposits, certificates of deposits, and money market funds.
Yeah, the chart looks more, it looks like more traditional here against.
Do you want me to share this, Axe? Do you want me to share?
Oh, you're good. I'm just looking at it
here.
It looks
gotcha.
It looks just like the regular Bitcoin chart, except I think it came a little bit lower in the bear, but it's kind of interesting though for sure. Yeah, pull that up for a second. I just want to point something out.
Yeah, Cassie, I'll go ahead and pull it up. You keep doing what you're doing. I'll go ahead and pull it up.
Now, you bringing up the chart with Bitcoin against the money supply, I think is very important because effectively one of the narratives we've been trying to tell people is that Bitcoin is a new form of currency because it does things very much different than gold or the dollar. It is its own unique brand and has the ability to operate in independent ways. So there's been a lot of the narrative of that first they're going to laugh at you, then they're going to ignore you, and then they're going to try to fight you. So it's like, I think we're getting to a critical period in time where this could be a cycle, like you just showed with that M2 with the Bitcoin versus M1 money supply, which is we just hit new tops as opposed to the different tops we had last year. And if we can break out and go to an all new high on that supply, it's going to show that cryptocurrency as an entire sector it's here to stay, in my opinion, and it's only going to keep going from here.
Yeah, it seems like it's going to shake everything up and gain a lot more relevance. I mean, that's already happened on the fundamental side. Now we just need to see it play out technically. I think that's why there's such a strong bid. Kind of what Rag said earlier about their, basically making it a good time. Everyone join the magic carpet ride on Bitcoin, from an institutional perspective. Okay, so this is the Bitcoin over M2, and here's the 2017 top, and it just came down and tapped that level perfectly on the retracement. So you remember this on. This was 20K, this was 34K, I think, on the price chart. But in relative terms, these are saying the same thing. So they touched, right? The line touched, but this is 20K back then, and this is 34K then, or whatever it was, 30K. So the increase in money supply, the M2 increased to the point where there was a $10,000 discrepancy in price between this time frame. So it's just interesting to see how Bitcoin performs against things like M1 and M2 over time, and how Bitcoin does a good job of lifting up the sheets or like opening up the closet, and then you see Greenspan in there or whatever, you know what I mean? Like it shows what's going on the back end mechanically with the Fed, because it is more pure and more true a free market in a lot of ways because of that scarce supply. So it's revealing everything. And another way that this is true too is on the Bitcoin gold chart. So like I'm pretty sure we haven't broken out against gold yet, but let's see. Yeah, so look, we haven't made a new all-time high in gold terms. So if you're measuring, that's 33 ounces of gold for Bitcoin currently, but we're right there. So could this be foreshadowing some sort of temporary top, or thinking back to how gold performed after the gold ETF went live? Could Bitcoin be getting ready to break this level and just go a lot higher? But I think this will be a key level to watch. The key level to watch is 37 ounces per Bitcoin. Currently it's at 33. So, yeah, man, there's a lot of cool data out there. You just got to know how to cobble it all together.
So the reason that we brought up Rags' tweet about this, about 85K Bitcoin and 5K Ethereum at the halving, is that this is a departure from the pattern, which is that up until this point, I think a large majority of people in the crypto sphere, especially this cycle and the last one, have been operating on the 4-year Bitcoin cycle. What that typically looks like is at the halving, we're typically like 60, 70% of the way to all-time highs. Now, we've already passed all-time highs before we're even at the halving. And now we're talking about going to 85, 105 Bitcoin, almost like doing, that's probably close to like 50% above old highs, maybe a little bit less. But the point is that whatever's going on right now in the market has such a macro effect that it is able to disrupt the previous macro pattern that's been in place for like 16 years. So that's why we ask it, which is something going on that is causing us to go faster earlier, or is this a true deviation from the 4-year Bitcoin cycle?
Well, something that you have going on right now that you hadn't had in cycles past is a spot Bitcoin ETF. You have a lot stronger buy pressure that's going on in the marketplace right now, especially when you think of BlackRock, all these institutions that are soaking up as much Bitcoin as they can. I mean, we talked about this a couple of weeks ago, Zenith. It took Michael Saylor about 3 years to accumulate the amount of Bitcoin that he has, and it took BlackRock like 2 months. So think of all that buy pressure that's, that is now in the system. And it's interesting because I keep, Bitcoin will run up 10%, 15%, and then it'll start to lag, and then there will be like a 3 or 4% sell-off. And I'm like, okay, good. Like I'm expecting a capitulation period. That's what I'm expecting to happen. But for some reason, over the last month or two, it just hasn't come to fruition. Like it'll just stay stagnant, and then it'll just almost start to go vertical again. So I mean, it's the steady buy pressure. Crispy, what are you thinking?
Well, I'm just kind of add to that, right? I think you're right on with this, and I think again it comes back to these institutions. Now I don't have the data on hand myself. Maybe Axis could speak to it, but this whole idea circulating around that many of the people who thought we were in the normal type of cycle have already unloaded, their Bitcoin, and then of course all the talk of the super cycle, with the expectation they're going to get a dip, right? And then with the expectation of a super cycle, the rest of them don't want to get rid of it, right? They're going to hold on to it. And all of that bodes well, for continuing to see that price go up.
Axis, what are you thinking?
I'm just thinking that Bitcoin's overperforming historical price action. I thought we were looking more like 2015 on this one. But now it seems like it's going up at a faster clip. And
2009,
and it makes sense. Actually, when did gold do its? This This is interesting. When did gold do its ETF? It was 2003, right? I'm pretty sure it was 2003.
2003, 2004 is my understanding. I've also been trying to do a little historical research into this one as well, and it seems like there's very much a different regulatory environment when it comes to gold's ETF launch in 2004 and what they were allowed and not allowed to do back in those days. I will say we absolutely have to kind of go hats off to the gold folks because they are the ones who really opened up the market to this kind of ETF opportunity. To now we're at the point where we fought, and Grayscale in particular fought the government over this one for damn near 3 years. And now we're at the point where it feels almost inevitable that an Ethereum ETF is going to get approved no less than like 5-6 months after the first Bitcoin ETF goes off. This is kind of one of those things where it's like it took mankind close to like 10,000 years to invent an airplane, but it only took us 70 years to go from airplane to the moon.
Yeah, it's 500% would put us at like 220. Like so, from the point of the gold ETF, it did 500% sometime in the end of 2003, early 2004. So I mean, that would from our opening of the ETF, you'd be looking at like 220 to 240, just like RH is saying. So time frame wise, it was a lot longer with gold because it was a lot bigger market at the time. And I think the supply dynamics are just completely different, obviously, between gold and Bitcoin. So I think what's going to happen is we're going to hit a liquidity event where Bitcoin's just going to go crazy. And in order to tame it, there's going to have to be some sort of like a mid-cycle lull or some sort of a sideways or crash that happens. Hopefully we get 85 and then 50 or 120 and then retest the all-time high, for example, previous all-time high, to like extend this market cycle out a little bit longer, and give time for the miners to produce enough Bitcoin to create a second leg. But it's going to be one of those things where it's at the point now where it's very hard to predict, because we're in a period where we've never seen anything quite like this yet. Man,
it's interesting that you brought that up. You brought up the miners there, and for the first time, pretty much, the basic economics of Bitcoin fall on the halvening. It's a simple supply and demand thing. I've said this on our show plenty of times. When Bitcoin halves, it automatically creates a supply shock. All right, because you only have half of the supply now. And as demand ramps up due to that, it's going to increase the price of Bitcoin. Well, I'm pretty sure for the first time in Bitcoin's history, miners are actually in the profit pre-halvening. Like, it's interesting to think about that. Plus, when you take into consideration, think of the inflation that we just went through over the last year or two. Think of the increase in goods, increase in prices across the board. And for the first time pre-halvening, miners can start to unload that money at a profit well before they were able to in the past. So it'll be interesting to see if that plays some sort of dynamic in it at all.
Yeah, it most definitely will. It will definitely play a dynamic in it. And the other thing that is interesting is that costs to produce Bitcoin has come down drastically, because a lot of these institutions, they're using things like natural gas or biogas, where they're converting waste products into Bitcoin. And so the overhead is just a lot less from an energy perspective. And so like the delta and profitability of it might be super attractive. You might continue to see more governments get involved, the oil industry get involved, which would then even exacerbate the shortage of Bitcoin and the upside potential even further. I just think that this is what we've, as a Bitcoiner, coming back from like 2017, thinking forward, like what was possible, we're living it now. It's amazing. Like, it's crazy how big of an impact Bitcoin's having on the global economy. And I originally being a miner myself, like I've of course found that stuff fascinating, and just seeing how little bit of Bitcoin is available on the market. It's going to take a huge markup in price to convince people to sell their Bitcoin. Does that look like 120? Does that look like 240? I think so.
Good stuff. Crispy, got any final thoughts there?
I've got a ton of thoughts, man. Hey, listen, we got a great future ahead of us. I'm excited. Getting past the 5 stages of grief. Let's move on. Yeah, we're moving on. Looking forward to all this going on. I think we're gonna see some explosive action. Just got to hold on to the horse. or the bull, whichever it is you're riding.
Agreed.
I got one more
Axel,
chart to show on that. Yeah, it's
Yeah,
kind
man,
of interesting. Yeah.
I'll go ahead and share it now.
Yeah, so this is a Bitcoin monthly chart, and the yellow vertical lines here, those are the halvings. So I got the next halving coming up next month. And the red bands that kind of come up here, this is basically showing profitable periods. So the deep red here, this is unprofitable periods in Bitcoin's history based on an average price of 6 cents per kilowatt hour for power. Many of the miners nowadays are operating at between 1 and 3 cents. If you're operating at 5 to 6 cents now, you're kind of like behind the curve in a lot of ways. But I'm basically circling all the areas in the history of Bitcoin where it was unaffordable to mine. So we've just popped our head out of unaffordability. These are great periods for liquidating out on inefficient mining operations. So you could see that this was the longest ever inefficient mining period. And it's because the hash rate has just gone parabolic, exponential. And even the price was, so low that I'm sure a ton of investment, a ton of places went under during this period. I was mining through this period, and so it was great. It was great when we were up here, and it was terrifying when we were down here. I had miners on half the year and off half the year. This period, it was just straight. You were underwater for like over a year, between May of 2022 and October of 2023, so a year and a half. But to your point, if you survive that period, now you're being rewarded because we're finally back in the green, and maybe this will help us project forward how high the price can go. So maybe we'll do that live now. We'll say, hey, during this cycle, we got a 16x move off of when it went profitable. And then off of this one here, we got a 5.3x move from when it became profitable. So what's 5.3x from here? 200K. The difference between 16x and 5x is what? 16 divided by 5. Let's say we get like a 2 to 3x. That would be anywhere from 85K to 127,000. So it's funny how the mining economics kind of foreshadows where certain liquidity ceilings could be resting based on the delta between 2 cycles ago and the current cycle. And you can apply the same logical process to predicting when is Hex going to get his head out of its ass as well. Because we'll be able to actually project forward, because we know the future market supply, we'll be able to predict this stuff over time with more and more accuracy.
Good stuff. Good stuff. All right, gents, any final thoughts before we go ahead and wrap the show?
I got one last topic for when we're talking about Bitcoin and ETF stuff, which is we do have the halving coming up. Correct me if I'm wrong on this one, but we're going from Bitcoin mining rewards per block of 6 Bitcoin down to 3 Bitcoin. And by the numbers, what I've been looking at is what kind of scale does this have when it comes to the rest of the market, to try to put this in perspective. So when we had the ETS launch earlier this year, BlackRock started off with about $2 billion in assets under management. Understandably, there has been some price appreciation during this time, but in that time, BlackRock has gotten up to about $14.7 billion asset under management. Notably, they did pass Michael Saylor and MicroStrategy's holdings. They are now at about 203,000 Bitcoin. Just for reference, in about the 60 days, we're being generous in calling it 60 days, that would mean that Bitcoin miners produced effectively about 50,000 Bitcoin. This means that in that same time, BlackRock has been able to, just BlackRock alone, has been able to buy up 4 times the supply that the Bitcoin miners have been able to put out. Keep in mind, we are going to the halving, which means that's going to drop down to 3. So depending on what the demand looks like for this looks like it might be a situation where you have supply halving and demand more than doubling in this case. Also, right now, I would think the latest estimates have Grayscale assets under management at $28 billion. I know this might be me attributing some characteristics to BlackRock, but I know they don't like to play second fiddle to folks, so I imagine they're trying to come for Grayscale, and it looks like they might even be doubling assets in that time period.
Good stuff.
Yeah. Tell you what, I'll jump in here on this one as well. So you were talking about all-time high predictions for Bitcoin. One of the things that we were looking at previously on a different stream was I was doing the comparison of all-time bear market lows to all-time highs, and then also all-time highs to the next all-time highs. one of the principles that I've been operating off of is that we're going to have diminishing returns, especially when it comes to Bitcoin, the further we go into the future. It's had a lot of time to run, and unless you assume it's more of an S-curve shaped, where we're going to hit that critical mass and really explode up more parabolically, I approach it more from the logarithmic curve, which is we had those rapid aggressive gains early on, and now pretty much for the rest of the time, we're going to see less and less gains overall. So if you want to go for the Richard Hart tweet of 241.5K Bitcoin, then that means from the all-time low, or for the bear market low to the new all-time high of 241, then that would be about a 16x. That is in line because if my math serves me correct, we did about an 18x during the last bear market to all-time high. So that falls in line there. The one that does kind of draw me back a little bit is if you go from the previous all-time high of $69,000 Bitcoin to $241,000 Bitcoin, that's where you actually start to drop slightly below. That's where you start to see that that gain would actually be larger than the gain between all-time highs between 2017 and 2021. So that's where I kind of like use a splash of cold water to be like, yes, we are going to have crazy demand and reducing supply. However, at the same time, mathematically speaking, if the pattern holds, which I don't know if it will at this point because clearly we're breaking the pattern a bit, but it means that, in my opinion, I see like 186 as my range for Bitcoin all-time high.
Well, I guess we're going to find out when we get there. You know, but I use similar logic for the Ethereum side, and my kind of low case for Ethereum is around 11, and I think it may hit 21 this cycle and as high as 33. You know, based on the idea that we'll see similar types of action as Bitcoin and the ETF approval. But again, you know, really picking the numbers. I like picking the numbers, but at the same time, really just have to watch what the cycle does and when the blow off top comes, because it really doesn't matter what I think the number is going to be. What's going to really matter is when people, you know, when we run out of buyers.
That's very true. Go for it.
No, you go.
I was going to finish up this thing real quick. So when it comes to talking about Ethereum, I think that one's interesting as well, because I mentioned previously, we do have the Ethereum ETFs ready for approval starting in May for their first last potential deadline. Granted, that's not the BlackRock ETFs, so those ones are happening in August, and BlackRock is the company that has the truly flawless record of like literal single-digit losses and like 270 plus wins. But the reason I bring this up is that when you look at Bitcoin, we pretty much went on a massive run ever since September of 2023, and we've been talking about ETFs for years beyond this at this point. Like, pretty much this entire cycle has been dominated by ETF talk. So that is that built up and pent up pressure and like anticipation of what's going to happen. And we finally saw it happen when the ETFs got approved and we jumped up to 48, and then we had the Grayscale sell-off event, and now we're all the way up at 72. So we've had multiple years of buildup for Bitcoin. All that time we were focusing on Bitcoin and not Ethereum. So notably, Bitcoin is the only one that's above all-time highs. Ethereum is not. Now we have time for people to kind of capitulate their Bitcoin gains and then also start asking the question, what's the next big thing? And that's where we get the question of, is it going to be Ethereum? And that's why I ask, like, how much buildup is Ethereum going to get for this? It's probably not going to get the same treatment as Bitcoin. However, at the same time, it does make sense, especially if they're this close, to break all-time highs for Ethereum pre-halving.
Yeah, that's a possibility for sure. I think if we're looking at like a May or August ETF approval for Ethereum, it kind of determines where the tops of these two assets kind of occur short term. And you know, how exactly Bitcoin profits roll into Ethereum and of that nature. I think DCC, dollar cost crypto, calls this the ETF cycle, right? The ETF cycle will only get really one of these on the two big blue chip cryptos. So that's why it's important to capture as much value as you can during this cycle, and what sets it up to be the super cycle that we've all been waiting for since the 2017 bull market. With that in mind, I wouldn't be surprised to see a wrench get thrown in there and shake it up a little bit and change up the kind of timing and tempo of the cycle because of the difference that we're already starting to see in the price action and like how vertical Bitcoin's going. So to the whole point about volatility decreasing in Bitcoin and that logarithmic curve, I'd like to pull this chart up. It's a good example of this. Again, is Bitcoin on the monthly. I got the halvings labeled out in in the yellow vertical lines, the fourth halving, here's where we're at next month, and then 1,400 days from that, you'd get that final halving. Now, how poetic would it be as time progresses that we continue to see, decreasing volatility? You can see that representative of the delta between these bands getting less and less over time as we get out here to the next halving, not the one coming up in April, but the one going out into 2028, that the volatility changes, the supply dynamics change, the incoming demand changes a lot. Is it possible that we see, if we don't get the ETH ETF in April, we get it like later in like August or something, and this is where we see that rotation out of Bitcoin leading into that. We get that top here. This is right around our $120,000 level. We get like a short-term top, and then we get a mid-cycle crash, potentially as low as the bottom of this logarithmic band, somewhere around the all-time high at 60K. And then a second leg that takes us into spring of 2026. And this is something I've been saying over and over and over. And I hope I'm right, because it'll be the most epic call on earth. But I do see that this isn't going to play out like other cycles. Up before down, as high as 85 to 120K would hit the top of this logarithmic regression curve, and then we'd get something that we've never seen before, which is like a mid-cycle crash from a new, like those highs. And then we get something we haven't seen before, which is a retest of the base, and then a second leg or second wind that gets us up to that $240,000 target sometime by May or June of 2026 to touch the curve for a second time in the middle of a cycle. And then we start a longer-term bear market. But as one would have it, this is going to be decreasing downside. I think perpetually we've seen less and less downside in every single cycle. I think we'll continue to see that because the opportunity will be in capturing supply as the world wakes up to Bitcoin.
And also keep in mind that something happened in this last bear market that's never happened before. Ethereum bottomed 6 months before Bitcoin did. So
yeah, dude, that's wow. Thank you for saying that, because that's a huge point of how things are starting to change. Yeah, awesome.
Could we see something drastically different like we saw in the bottom of the last bear market? We'll see. We'll have to wait and find out.
Ethereum's no longer beholden to the proof of work mining, so the economics of that one's completely changed. I will say that over and over, and that's something that deserves some good R&D. Even as a Hexakin or Pulse Chain user, that stuff matters. And if you really want to know, keep your eye on the ball with these market cycles and crypto. You want to know the fundamentals, the technical fundamentals. Anyway, thank you so much, guys. Appreciate you having me on. This has been a blast.
All right. Final thoughts before we go ahead and transition to wrap up. Anybody? All right. Sounds good.
I appreciate that you brought Axis Alive on board for this.
For sure. For sure. All right, Crispy, I want to turn it over to you. Brag a little bit about Hexfire.io. Tell the folks where they can find you and what you got coming up around the corner.
Oh, sure. Yep. So as you mentioned earlier, the devs have finished working on my website, continuing to make some adjustments to it, and we'll continue to add to it. The website is a new face for all the public data reporting and whatnot for Pulse Chain and Hex that I have out there, focusing mostly on Hex, but also branching into other things, primarily trying to just share that information out to everyone. I have a new service that's there, a subscription service that some people are interested in. It gives them even more in-depth information where we dig into things like indicators to help call the tops and some of the things that we talk about a lot, like pi indicator, different types of indicators and multiples that kind of give us an idea what's happening in the market. But in any case, you can go to the website at hexfire.io. Go check out the blogs, the video catalog there, and also the free charts.
Good stuff. Axis, brag a little bit. Where can folks find you? Did you want me to share this here? Yeah, I see it behind the screen. Do you want me to share this or no? All right, perfect.
We're good.
All right.
Yeah, so come find us at accessalive.com. We have a growing group of awesome members. A lot of them were in the chat tonight supporting us. I appreciate you all. Give the DGen Roundtable a like and subscribe to their channel. They're an up-and-comer. I've been talking about them since the Hex conference. Thank you so much for all you guys are doing. I think your production quality is really high. During these times of chaos, try to keep a level head. And what else can I say? Find out more information on Twitter. I'll try to update that. I've been kind of quiet lately on there. by design. But yeah, if you need more direct access to me, go check out the website and the memberships. We had an amazing showing in Vegas, and I got to meet you guys, some of you guys from the DGen Roundtable there. And so like Zenith and Twinkie and some of the others. So I appreciate you guys for coming up and saying nice things. I had people coming up to me talking about the Axis token. It's on discount right now, by the way. It's in a move for potentially its third 80+% drop. So if you have any faith in the future of that token, maybe it's worth an eye or taking a look at it. Yeah, people are definitely looking for opportunity over there on that side of the fence. And yeah, just a pleasure to be here. I felt like we uncovered some new ideas and concepts here together on stream. So I thank you for that opportunity. You guys had some great questions. I'm happy to come on again in the future.
Good stuff. Zenith, what you got coming up, man?
Massive thank you to these two gentlemen, and also Rags for coming on. I really like talking with both of you gentlemen because you're very numbers-oriented people and data-oriented people, and I'm an engineer and a project manager for my day job, so that's what I live by. So I really resonate with that. Again, check out both these guys, and also someone who's probably a little less sung and public is Candace, part of the Axis team. I want to give her a shout out. I had a great conversation with her in Las Vegas. She gave us some awesome business ideas for DRT, and fantastic. As far as what we got going on over here, I am running book club this Friday. That's right. I am hosting. We're doing Poor Richard's Retirement by Aaron Clary. This is probably my first recommendation that I've put out there, as opposed to going off of what other people have talked to me about. Aaron Clary is a guy that talks about having crypto as a rainy day asset, and then I think he also has a decent grasp on where the future is going and how to change with the time. So I'm very much looking forward to hear about what he talks as a retirement plan for the average folk who might not be as degen as we are here. But that's what we got going on. And then Sunday stream, as always, I believe Will be hosting that one. Am I right, Josh?
Yeah, that's correct. Will's going to be hosting it.
Excellent. So we got usual time over there. And then as far as that goes, I am Zenith. You can find me on Twitter, Instagram, Twitter and Instagram at ZenithDI. And then Hexco Space Force is the meme page that I run for all the entertainment and news updates that you can find on Twitter, Instagram, and YouTube as well. So that's what I got. Josh, please take us out.
Yeah, sure. Real quick, Cassie, any final announcements, any final thoughts, anything like that?
Not too much. I just want to say thank you to everybody for joining us. I know Rags is already gone. I was going to try and catch him before he left, but he had to go. So, but thank you to him. Thank you, Crispy. Thank you, Access. And very short here. Hey, Zenith, you've got a new nickname. I don't know if you've been watching the chat, but you're the Butterman now. So enjoy that.
All right, Butterman it is. We'll see.
Who's the Butterman here?
Sticks.
All right, good stuff. Hey, folks, thank you guys so much. Hey, the chat was on fire tonight. I say that a lot, but I could not keep up. Like 5 minutes into the show, I look up and there was like 75 comments already. And I was just like, yep, I'm probably not going to be able to follow this. So shout out to the chat. You guys were on fire tonight. Thank you guys so much for tuning in. Agent Jay likes to say this all the time, and I'm going to echo him tonight. We know time is your most valuable asset, so we appreciate you guys spending a little bit of time with us. This was an awesome conversation, and chat, you guys kept it going all night long. So shout out to you guys. Round of applause. You guys did phenomenal. Zenith, awesome job, dude. Axis, Crispy, can't thank you guys enough for coming on stream. You guys are awesome. This was a phenomenal episode. I want to say we had upwards of 290 at one point. So, I mean, we had the viewership. Everyone was rocking and rolling. Phenomenal stream. So, again, my name. Go ahead.
I said good.
Yeah, for sure. All right, guys. My name is Josh. You guys can find me on Twitter, on Instagram at Chocolate Taints. That's my moniker there. We thank you guys again so much. Make sure you guys like, comment, subscribe, join our Telegram, share this with all your friends and family. Let them know what you're paying attention to. Get in our Telegram, 24-hour access. It's phenomenal. For you guys that are still around, thank you again. If you guys are catching us on the replay, hit that subscribe button. Find us back here Friday night. And with that being said, make sure everyone degens responsibly.